Man, I just went balls deep into Salesforce stock. I took $50,000 out of my total world index and bought a stock that I believe is at least 50% undervalued and will probably, by the year 2030, be a $1,000 per share stock. This is going to blow your mind how massively inefficient the stock market is about Salesforce Incorporated, which has sold off massively over the past year as the stock has been absolutely pummeled by fears of AI disruption. As a matter of fact, if you look at the 5-year chart, the stock is down 23.7%. Compare and contrast that to QQQ, S&P 500, for example, which are up 60 to 90% over the past 5 years. This stock has delivered god-awful returns to shareholders. But when a stock is down so massively, when there is massive fear about AI disruption, that is the time to strike when you believe the stock market is mispricing a high-quality company. And that is what I believe is going on here with Salesforce. So I ran a DCF calculation to figure out a good buy point to purchase CRM based on reasonable expectations of growth. And we're going to go check stockanalysis.com, and I'm going to show you that these are actually pretty reasonable. So I did a 5-year DCF with CRM's trailing revenue in the past 12 months of only $41.5 billion and current shares outstanding of 949 million. I assume that for the next 5 years, Salesforce, the fourth be with you. Salesforce is going to grow their revenue by 10% per year for the next 5 years. Seems pretty reasonable. I project that their net income margin is going to be 18%, and it's probably going to be higher because the company is literally employing AI to increase their efficiencies. I believe they will print a free cash flow margin of 35% for the next 5 years. And in 5 years from now, the price to earnings ratio of Salesforce will be 30, as well as the price to free cash flow will also be 30. With a 15% discount rate on future cash flow and on future earnings, and a 2% buyback yield, where I believe because the stock has been sold off so heavily by the stock market, by Wall Street and their infinite wisdom, I believe that Salesforce is actually going to accelerate more buybacks than they already have been because the stock is undervalued. I get a buy price of $245 if you look at earnings per share, and a buy price of $477 based on free cash flow per share, and an average buy point of $361 per share to get a 15% rate of return. So you may be asking me, well, that's weird because the stock is selling at $179 approximately. And, if you go look at your purchase, strong man, you bought it at $178. Why are you saying the buy point is $350, $360? That is the buy point to get a 15% rate of return, assuming these modest assumptions seem pretty accurate, which I believe they will be. What is my actual return going to be? It could be up to 30%. No, we got to go higher. 31%, 32%, 35%. We're looking, if these assumptions are correct, at approximately a 35% compounded year-over-year growth rate in profits from buying this stock if you buy it at the current price, assuming these reasonable assumptions are true for the next 5 years. Now, let's test that hypothesis. Are my assumptions reasonable? And you look at the stock price, it's down. It's down. It's a horrible stock, right? Well, the current PE ratio is 22.84, and the forward PE is 1350. But if you look historically at PE ratios for this company, the ratio has historically been a lot higher. Just a couple quarters ago, they were trading at a price to earnings ratio of 53. And then we had this massive catastrophic fear of AI, which massively contracted the multiple. But once the market actually figures out that Salesforce is actually using AI for their benefit, the multiple is going to expand. So are you going to tell me that a 30 PE in 5 years for Salesforce is unreasonable? I don't think so. How do I know that they're getting into AI? I want you to just go look up Salesforce's Agent Force. Go look it up. Go read about it. They are building an autonomous AI agent platform to build and deploy intelligent agents that handle end-to-end business tasks across sales, service, and marketing. Salesforce is adapting. They are using AI to actually grow their business. And if you're concerned about AI disruptions now, well, let's go look at some of the historical metrics of their revenue growth. In the most recent quarter, Q4 2026, they posted $11.2 billion of revenue. That is year-over-year revenue growth of 12%. My assumptions are a more reasonable 10%. So you go back and you look and you say, why is a company that is, being disrupted supposedly by AI re-accelerating their revenue growth rate? That is a re-acceleration. The last time they had 12% year-over-year revenue growth rate, or even close to it, was back in 2023. Interesting, huh? This is a company that's just getting destroyed by AI. Okay, let's look at shares outstanding. They're buying back shares. In the most recent quarter, they bought 3.5% back. Their shares dropped by 3.5% year over year. So if you go look at my assumptions, I just do 2%. I'm just off base here, aren't I? Let's go look at their profits. Are their profits improving or getting worse? They've been able to maintain very solid high gross margins of 77 to 78%, and their profit margin is increasing. Their profit margin is going up. It's trending up. Revenue reaccelerating, shares dipping massively, which increases your earnings per share, and they're increasing profit margins. Look at their most recent free cash flow margin, 47%. So I want you to reasonably tell me, people, what is going on with Salesforce that is so catastrophic that this company is trading at a forward PE of 1350. You are buying a company that is at the center of the AI revolution, that is adapting quickly to monetize and build profits from AI, that is re-accelerating revenue growth at 12% per year, and the market's rating this company as a forward PE of 1350? I'm a little confused here why the market is doing this. Here's the key, people. The market panics in times of uncertainty. That is the time to strike. Do not be scared off by a stock that is down 32%, because in my humble opinion, that's a 32% discount on all future earnings of this company, which are actually going to accelerate. If you even look at analyst forecasts, even the analysts are telling you that they're bullish. One analyst has a price target of $405 in the next 12 months, and I actually agree with that. I actually agree with that forecast. If you go down and look at analyst expectations for growth, the average growth forecast for analysts is that Salesforce will grow their revenue 12% in fiscal year 2027. 12%. And the average, and this is the average forecast, is that Salesforce will grow their revenue by almost 9.5% in 2028. Looking at earnings growth, EPS growth projected for 2027 is 70.9%. 70.9% profit growth? Sign me up yesterday. And of course, fiscal year 2028, they're projecting revenue or profit growth to grow by 12.43%. Wow, you mean I could buy an investment that's trading for a forward PE of 1350 and get 70% earnings growth next year, and then potentially, but probably understated, earnings growth of 12.5%? Tell me, ladies and gentlemen, which number on this tool is unreasonable? So yes, I did buy $50,000 of CRM, and I have never been more bullish in my entire life about a company. I put my money where my mouth is. Of course, you need to do your own due diligence, and you should not make such concentrated bets like I have. I have a lot of confidence in this company, but if you do not have confidence in this company, you should maybe not buy the stock at all if you're concerned about it, or make a much smaller position. I advise people to, number one, hire a financial planner to make sure you don't make bad decisions. And number two, I recommend, especially if you're a newbie, to keep individual stocks to less than 5% of your portfolio. That is what I fervently believe. I'm a risk taker. I'm kind of a gambling degenerate. That does not mean you follow me. As a matter of fact, I recommend that you don't follow me. Because if I'm wrong about this, I could lose a lot of money. But I'm willing to take the risk personally because I can always make the money back and because I have a lot of conviction. So that's my analysis of Salesforce. I believe Wall Street is massively understating the future profits and revenue growth of this company. And because of this tool, which I believe I used reasonable assumptions here, tell me if I'm wrong, I believe that I'm buying the stock at a massively undervalued price and at a discount. Now, you can buy this tool yourself by checking out the pinned comment below. It is $30. You buy this tool, and it is your tool for life. You own this tool forever and never have to pay me another dime again. All you have to do is send me $30, and I will send you this tool, and you can use it forever. And you can put whatever assumptions in the tool you want. If you believe Salesforce is going to only have 5% revenue growth, if you believe their profit margin is going to be 12%, if you believe their PE is going to be 10 at sale, you can put whatever assumptions you're in, and you can figure out a rough approximation of when you should buy. But it's not guaranteed. Anything could happen, but you can adapt your scenarios to whatever future profits you think this company is going to deliver. It is up to you. Of course, this is only one tool and is not the only tool that should inform your investment decisions. Anyway, thank you for tuning in. Like, subscribe, consider joining as a member to support the channel. I answer all of your comments on every live stream, and I do members-only exclusive content, all for $5 a month. I will see you guys on the next one.